But the fear factor has gripped the equity markets over the last 2 months. Foreign funds have hit the sell button. Plenty to play out in both the forex and the equity markets. ET Now's Ashwin Mohan finds out what will get the foreign investor back on the last street.
2012 started with a bang for equity markets. Over 38,000 crore rupees was pumped into the markets by FIIs in just the first 2 months. But the euphoria was short-lived, as D Street witnessed a net outflow of almost 2,000 crore rupees by the end of April. The trigger for FIIs to hit the sell button was the government's move to introduce the General Anti-Avoidance Rules, or GAR. But despite the government delaying the rollout of the tax provision, FIIs haven't quite found their way back to the market.
Much of what's going wrong with India could be fixed with some clearer policy, with less ambiguity over taxation, and with maybe the government taking some longer-term decisions.
Inflation at over 7% and a sharp contraction in industry output has further spooked foreign investors.
Governments are being forced to rein in fiscal stimulus. Fiscal discipline is being forced upon them.
So what's on top of the FII wish list? Foreign institutional investors want more clarity on GAR. The grey areas need to turn white, and hopefully sooner than later. That's not all. They also want the government to tame fuel subsidies and also act on crucial reforms like FDI in aviation. Clearly, if the highs of February have to be repeated, Team Manmohan needs more than just a wake-up call. Ashwin Mohan, ET Now, Mumbai.